Even though the market has been rallying really well for the last many months, your portfolio might have not been doing that well. Or even more specifically, even though the market rallied up quite well over the last 4 years, you might have seen that different stocks or sectors are moving up at different times. This is not by chance. Smart money is always on the lookout for what is the next big thing, where is the next big investment going to be, and rotating their money throughout all of these sectors. And in this constant search for the next big thing, they'll do two things. One, they'll book profits out of the best earliest sector. Whatever rally was given in the earlier rotation of the markets, profits will be booked there. And two, there will be an unequally high allocation into the next sector or the stock which is going to boost up the next part of the rally. And simply put, this is what is sector rotation, and we are going to, with this concept, learn how you can use this concept and try to predict the next sector which is going to boom in India. So welcome to another video. This is Ajay Ajith. Let's get started. So trying to dig in deeper into which all sectors performed earlier and which ones are currently being the sectors in focus, I'll quickly give you a recap. During the 2020 COVID crash, you might have noticed that pharma and IT were the first stocks to bounce up. A lot of money went into these indices, and when the market moved up, they outperformed the market. And if and when the market even fell or corrected in between, these two sectors did not fall as much. But after 2021, both the pharma and the IT sector underperformed the rest of the market for 2 full years, and other sectors started rallying up. You might have noticed metal was trending a few years back. After that, banking and finance have been on an absolute rally, and in this current rotation we are at, you might have noticed that PSU companies, especially nifty PSU banks, have performed absolutely well. So how do we know which sector is performing the best? Using a free tool, TradingView. Obviously you know that tool, right? And using TradingView, we can easily understand and visualize which sectors are seeing the most money being pumped into it right now. So this is a TradingView chart of Nifty over the last multiple years. As you can see, it starts from 2008, 2009 up till 2024 as we are seeing it right now. We'll compress it later, do not worry. So what you have to do is you have to go click this plus sign, which will introduce a comparison inside TradingView, right? And you can add as many indices as you want here. And all of these are being added on top of the base, which is Nifty. And as you can see, if I put the chart as it is right now, basically what the tool or the comparison feature is showing that from the time period at the leftmost part of the chart, how much have each of these indices performed or outperformed the base, which is Nifty here. So you can see that from 2007, if you're looking at this chart, Nifty Bank, especially Nifty Private Bank, has performed the most. It has performed nearly 1000% from where it was earlier. Nifty FMCG has performed well, Nifty Auto has performed well, Bank Nifty and IT has performed well. You can see that while Nifty gained nearly 500% in this time frame, all of these other sectors have gained more than Nifty. And you can see few indices have underperformed as well. For example, Nifty PSC, which is public sector enterprises, Nifty PSU Bank, Nifty Infra, all of these have underperformed the market in this large, nearly 18 years time frame. So now that you understood how to use the tool, we'll quickly fast forward a few more years into how the market shaped up after 2020 COVID crash. So if you're keeping the leftmost part of the chart here as the COVID crash day, the lowest of the low that Nifty made, you can see that Nifty PSU Bank has rallied up by the most, by more than 400% from where it was at. Nifty Realty, Nifty Public Sector Enterprises, Nifty Auto, Nifty Energy, and all of these sectors have also done really well. And for any time frame in the market, you can do the same. You can come and adjust the chart to be in a way that the weekly candle, if you want to keep it that way, is at the leftmost part of the screen, and from there you can see how much each of these indices have moved up, including the base index, in this case Nifty also. And even from the start of 2023, we can see that Nifty PSC and Nifty Realty are the ones which have performed the most even outperforming Nifty PSU Bank, right? So this gives you a whole holistic view of the market, how each of these indices have performed. So this means both in comparison to the base that we said, which is Nifty, it has outperformed as well as performed really brilliantly compared to any other sector here today. And in fact, if you think about it, this is what you also need, right? Sectors that do not fall much if the market is correcting, and ones that do really well when the market is moving up or in a bullish phase. So let's look at how you can visualize this better. There is a specific tool called as relative rotational graph, which was developed in the early 2000s, which is being used for this exact purpose. Julius D. Kempener, who was a head of quantitative trading in a Dutch-based investment bank, he found out, or he invented, this relative rotational graphs in the early 2000s. These graphs are a very unique way of visualizing how the market is looking right now with regards to both relative strength as well as the relative momentum. And using these two parameters, which are relative strength and relative momentum, the graph is divided into 4 different quadrants, which are improving, leading, weakening and lagging. These are primarily used for understanding which sector or stock has more strength right now in the market, which are outperforming not only a benchmark but also all other stocks in that industry. So we'll quickly go to this RRG, relative rotational graphs, and try to visualize our movement, our market movement over the last many days. Yes, it is a paid tool. It is slightly expensive if you're a casual investor, but there is a 30-day free trial and I urge you to take it. Do not worry, it's not a paid advertisement. It's just a tool that I came across and found really useful. Yes, so this is a website. As I said, it is called stockcharts.com, and once you log in for the free trial, and you can go down and you can find the RRG charts, which is what we are talking about today. Once you launch it, you can go here and select Nifty, Sensex 30 or India sectoral indices. So for now, I'm going to select India sector indices so that I can help you visualize how this chart actually operates. So as you can see here, all of these sectors have been selected and the benchmark has been set as a CNX 500, which is Nifty 500 for you. It is a 500 biggest stocks in the Indian stock market, if you want to put it that way. And I'm going to visualize a chart movement over the last 5 years in a monthly perspective. So I've selected all of this, I've hit update. So I'm going to zoom this out, and as you can see, this chart is draggable, and as I slowly drag this, or I'll even hit the animate button, right, you can see that all of these sectors in a larger sense, they tend to go on a sectoral rotation mode, or they go to from one quadrant to the other and keep on moving in that similar direction. So the first quadrant here is improving, the next one is leading, the next one is weakening, and the next one is lagging. So these stocks keep on moving in a clockwise direction almost entirely, right? There are few times where it could move back down. It could be maybe due to a new government subsidy program which is announced. Something extraordinary could move the index counterclockwise as well. And over the last 5 years, you can see this pattern is definitely being followed. If you want a longer term view, you can select the monthly chart here, and if you want a shorter term view, you can select the weekly chart. And as I said earlier, on one graph is the relative strength, which is benchmarking how strong this sector or stock is compared to the benchmark that we have selected here, which is Nifty 500. And on the other side, it is relative strength momentum, which shows how much change is happening in this relative strength itself. It's not a difficult formula at all. In fact, I'm sure if you're an enthusiastic coder or a developer, you can develop this yourself. Just don't forget to index all of this to 100 as they've done here in this chart. So the concept of sector rotation makes it very clear that no sector can keep on rallying up no matter what the circumstances for always. There will be always some new sector which is coming up, especially in a time frame of 1 to 3 years. There will always be this sectoral rotation which is happening. Smart money will keep on rotating between each sector as time moves on. And we can understand how to use this data by visualizing it in 2 ways. One, you can visualize it in a way which is similar to momentum investing, and the other you can visualize it in a way which is similar to value investing. In the momentum investing part, you look at which stocks are being shown in, which sector is being shown in the leading part of the quadrant. As you can see here in the RRG chart, right now CNX Auto is performing really well, that is Nifty Auto, Realty is performing really well, and even Pharma pharma and metal are in the green quadrant, which is the leading quadrant. And in the second way, which is a value investing kind of method, you have to look at whichever stocks are in the lagging sector of the market, and from there you have to catch the best picks so that in the next market rotation, the only problem is you don't know the time frame, right? In the next market rotation, you can make the most of investing in all of these sectors. So one, you can see it as momentum investing, the other you can see it as value investing, just like the classic confusion a lot of investors have, a growth versus value stocks, right? It's very similar, just like that. And if you're looking at which all sectors are underperforming the market, it is Nifty Media, Nifty Finance, Bank Nifty, and Nifty Private Bank, which have been outperforming, right? If you've noticed what is happening, you've seen that HDFC Bank has fallen, and a lot of these banking indices have also fallen as a result of that. And there is a good chance for this index, yes, for this index, not for the specific stock, to bounce back up. That is going to be a really good opportunity for you to cash upon. So I like to consider myself as a momentum investor who likes to invest in companies which are showing a really good movement in their prices. And my favorite way of doing this is trying to identify dark horse companies inside these sectors we have been eyeing. These are companies which have seen no dip in their operating performance, really good revenue and net profit growth, and just the fact that they are not just rallying because the entire market is rallying. They are not rallying because the entire sector is rallying. They are rallying, or they should be rallying more, just because their operating performance is improving every single quarter. So looking at the pharma and the metal segments, I've identified few stocks that I feel fit into this segment, and it can move up even further from here, right? In the pharma space, there is Alembic Pharma, IPCA Labs, and Gland Pharma, which I found really interesting. And in the metal space, I found Coal India. Yes, it has rallied a lot. SAIL and Sunflag, which are ideally in the next rally, they are going to perform really well. Again, these are not stock recommendations. These are some stocks for you to study on. I'm just suggesting these stocks so that you understand the concept of sectoral rotation. You can watch them and maybe even try to understand how they perform in the upcoming months. A few of them have already rallied, I know, but then that is the fun of momentum investing. You can go even further and go for the value investing part. Do not forget to go again for the dark horse companies which have been performing really well, showing good appreciation in their net profit and in their net revenues. Still the stock price is not reflecting that much rally. That is the stocks that you want to go after. So yes, hope you understood what is the concept of sectoral rotation, how it works, the examples, and few stocks and charts that you might want to study upon. This is Ajay Ajith signing off. See you all in another video. Bye bye.